Right now we're going to move on with a look through the day's top business news stories with Stephen Carroll. Hi there, Stephen.
Hello, Catherine.
We're going to start off with a story from right here in France. We're talking about these very controversial changes to the laws surrounding Sunday trading.
Yeah, that's right. After a long legislative battle, lawmakers in the lower house of Parliament here approved changes that loosen the rules around shops opening on Sundays. They'll now be able to open on 12 Sundays per year instead of 5. Outlets in designated tourist areas will also be allowed to open more regularly. It's part of a wider law designed to boost France's stagnant economy, but there's a debate over exactly what benefits, if any, the change will bring. Catherine Viat has more.
Keen to shop on Sunday in Paris? Till now, you'd be out of luck. But that's set to change thanks to the country's economy minister. Known as the Macron Law, the Sunday openings are just part of larger job-generating measures. Shops will now be allowed to open for 12 Sundays instead of 5. The new rules will also create international tourist zones where all shops can stay open every Sunday. They'll also be allowed to stay open until midnight during the week. There would be 4 such zones in Paris, including the Golden Triangle of the Champs-Élysées, Avenue Montaigne and Georges V, as well as Rue Saint-Honoré, Rue Royale and Place Vendôme, and Boulevard Haussmann, home to the city's famed department stores.
It will create jobs, as well as provide additional purchasing power to employees, and allow more people, both French and foreigners, to shop, so I think it's a winner.
But critics see it as an attack on the country's way of life.
If the major chain stores are open on Sundays, and all the studies have shown this, thousands of jobs and the local stores that bring life to neighborhoods will disappear.
With unemployment at record highs, the government needs to create more jobs. Paris's Chamber of Commerce and Industry and the country's largest employer federation, MEDEF, both say the measure will do just that. They differ on the amount. However, the Union of Professional Craftsmen say it'll put 225,000 jobs at risk. Working the new Sunday and late shifts would be voluntary, and staff would be eligible for extra benefits.
Well, we're going to move on to Japan next. Stephen, some good economic news there.
Yeah, we'd like a bit of good news on a Monday morning. So Japan has come out of recession, but only just. The world's third largest economy registered growth of just 0.6% in the last 3 months of 2014. Japan plunged into recession last year after an increase in sales tax stopped consumers spending. The Prime Minister Shinzo Abe called and won a snap election as a result, seen as an endorsement of his economic policies. But growth was less than had been expected, and another tax rise is in the pipeline as Japan tries to reform its economy. Well, let's see how that news is affecting the markets and trading today. And we had seen the Nikkei in Tokyo rise to 8-year highs, closing over 18,000 points, which is the first time it's happened since 2007, up 0.5% there. As you can see, not much worrying the rest of the markets in Asia. Lots of focus on that meeting in Greece later today. That's also the preoccupation on the markets in Europe, which have just opened. A pretty flat start to the day, so obviously not much worry either way. But investors certainly holding their breath to see what comes out of that Eurozone finance ministers meeting later today in Brussels. In Paris, the French telecoms firm Bouygues has opened up over 2% after reports that Altus is preparing a possible takeover offer for its telecoms business, part of one of the big shake-ups here. Let's move on now to look at some of the day's other top business stories. And the internet security firm Kaspersky says up to $1 billion may have been stolen from banks as part of a 2-year-long cyber attack. Interpol and other authorities are investigating phishing attacks on senior bank officials in 30 countries. The attacks said to have been mounted by a gang called Carbanic that's operating out of Russia, Ukraine and China, among other places. The travel website Skyscanner says its revenues jumped by more than 40% last year to more than €125 million. The Financial Times reports that's down from last year's results, though, when revenue doubled. The company's boss said that hotel and car hire bookings now account for a quarter of their annual revenues. And the €5 billion contract to sell 24 French-built jets to Egypt is due to be signed later today. It's the first export sale agreed for the Rafale jets that are made by Dassault Aviation. Defence Minister Jean-Yves Le Drian is due to finalise the deal in Cairo later.
Right, we're going to talk tourism now, and the question really is, when is Big Ben not Big Ben? When it's been renamed by Chinese tourists, apparently. Chinese visitors to Britain being asked to rename some of the country's top tourist attractions. What on earth is this all about?
This is a campaign by Britain's tourism authority, Visit Britain. They're hoping to attract more Chinese tourists, a very lucrative section of the market. So they opened up a competition on Chinese social media to rename some of the UK's best-known landscapes. So the London skyscraper, the Shard, has become the Star-Plucking Tower.
Oh, I like that.
Trendy Savile Row has been dubbed Tall Rich Handsome Street.
Oh, yes,
Is
I
how
agree.
I like people to describe me. And Scotland's Highland Games have become Strongman Skirt Party.
I absolutely love that one. It's my favourite.
Visit Britain are hoping to boost the revenue from Chinese tourists to £1 billion a year by 2020, so a really big increase. Chinese tourists, really a lucrative area of the market. They spend 4 times more than other tourists when visiting, so they're a really important section of the market to grab.
Absolutely, and now they've got all their own names for all those top attractions. Very clever idea. Thanks very much, Stephen Carroll, our business editor here at France 24.